Hello, welcome to LCG's preview for the week ahead. I'm going to discuss the beginning of the fourth quarter of 2018, earnings from Tesco, and the September non-farm payrolls release. Before that, I'll run down some of the top corporate results to watch this week. PepsiCo report quarterly earnings on Tuesday. Tesco gives a half-year update, and Aston Martin is scheduled to IPO on the London Stock Exchange on Wednesday. Then Ted Baker, DFS and Costco all report earnings updates on Thursday. Moving on to the economic calendar, on Monday there's the Tankan survey from Japan as well as manufacturing PMIs from Europe, the UK and the US. On Tuesday, it's the Reserve Bank of Australia interest rate decision. On Wednesday, there are services PMIs from Europe, the UK and the US, and US ADP employment reports. On Thursday, it's US factory orders. Then on Friday, we round off the week with US non-farm payrolls report for September. So to discuss the fourth quarter, obviously it comes off the back of an interesting third quarter where some markets were a little bit stagnant. For example, we didn't get too much movement in the major currency pairs, a bit of a consolidation in the US dollar for the most part, but we did see surging oil prices hitting a 4-year high. We did see equity prices in the US hit record highs, so first record high for the Dow since January. Obviously undoing that entire February correction that we had. Still potential for a double top, so that will be something that we look out for technically in this fourth quarter. We've recovered those losses, but are we essentially in a topping pattern where prices move sideways and potentially eventually break lower? Or have we broken to new highs? Is this a sustained breakout? And are we looking at the resumption of the bull market? I tend to default towards following the trend, and I do tend to think that this US bull market has legs, but it's certainly some risks going into this fourth quarter. For example, we've got the US midterm elections, plenty of political risk from the US anyway, so this should be intensified by these US midterms. There's a lot of talk about a blue wave. We'll talk about more about this in the coming months, but obviously should the Democrats take either the House or the Senate, that would disrupt Donald Trump's agenda and maybe seems a bad thing for markets, which for the most part have done pretty well under Donald Trump. So switching gears to earnings from Tesco. Now, Tesco have had a really good run, up 30% in the last year, down 7% in the last month. So we think there's potentially more of this to come. Tesco have had a very good run under Dave Lewis. Obviously, general sentiment around the company was really battered after the accounting scandal. The rise of the discounters, Aldi and Lidl, really punished all the supermarkets. But signs now that the price war is still chugging along. There's wafer thin profit margins here. And should there be a bit of an upset for the consumer, obviously a Brexit which affects the whole UK economy or anything along those lines, Tesco is susceptible. And we saw the introduction of the Jack's discount line, but obviously the shares actually fell on the announcement. And Tesco's only going to be introducing about 15 new Jack's stores in the next 6 months. If you compare that to the 700 plus Aldi and Lidl stores, they've got somewhere to go to actually compete on that discounting level. Switching gears finally to non-farm payrolls. It's the September numbers. We're expecting 185,000 jobs created. That's versus 201,000 previously, so a slight downtick. But what was interesting from last month was that we saw 0.4% month-over-month wage growth. Now, if you remember, going again back to what was the cause of the February correction, it was the push higher in bond yields, and maybe something that we need to look out for into this fourth quarter is rising bond yields. The US 10-year is above 3.1% at the time of filming. That is close to the highs and potentially a breakout to see yields push again further and prices lower. That could eventually affect equity markets. So potentially a bit of extra importance around this non-farm payrolls release while bond yields are high like they are, and when we had a previous month of high wage growth, which could follow through this month. Thank you very much for watching. Good luck with trading this week. And if you want to see these videos as soon as they're released, Please follow LCG on YouTube and social media.